Okay, back here watching markets at lunch, and Nayanthara rise turning out to be a fantastic day for our markets. The Nifty had breached 8900. It's a tad below that level at the moment, and the Sensex on its part is at 28,817. Financials and auto stocks, they seem to be the stars in today's trade. The PNB, the top gainer on the Nifty at the moment, up by about 4.5%. Axis Bank is another strong mover. From the autos pack, I would point out to Tata Motors as well as Tata Steel that are doing really well. Of course, the house of Tata is doing really well. So now let's get in an expert view. Mayuresh Joshi, the fund manager at Angel Broking, now joining us here on ET Now. Thanks, Mayuresh, for joining us. The big development that took place on Friday was, of course, the disappointing jobs data coming out of the United States. Doesn't look like we're going to see that rate hike from the US Federal Reserve anytime soon. What does that mean for our markets?
Afternoon, Nayanthara. I think the obvious has been witnessed in our markets. The markets have shown a huge amount of buoyancy. And again, the expectations, as you rightly pointed out, I think the Fed rate hike does get pushed back by a few months. So having said that, probably I think the markets are preempting recovery in corporate earnings expected in the second half, along with the capex cycle recovery to probably take place. And with those presumptions, I think the liquidity which is aiding the markets in support, I think that is taking the markets higher. So again, I think the buoyancy in the markets would continue. But I would still prefer a stock-specific action because valuations for certain sectors and certain stocks are looking stretched at this point of time.
So what would you say are the domestic triggers to watch out for now?
Well, largely I think the re-rating in the markets would happen once the corporate earnings revival start taking place. It was a mixed bag for this quarter gone by, but largely I think the expectations laid out for a 14-15% earnings growth for the better part of next year and improving thereafter is creating further fillip for those markets. Now the earnings are expected to revive, as I said earlier, from Q3, Q4 onwards, but largely the markets are presuming that they will come through. The government reforms have been on the right direction. You're probably expecting a positive view probably coming in even from the global sovereign rating agencies. So I think that is keeping the markets on a high that we're probably witnessing at this point of time. And again, I think aptly supported by liquidity. I think liquidity is coming in thick and fast with the kind of liquidity flows that we are probably witnessing at this point of time. I'll not be surprised if we make a rise in the short term.
Mayuresh, this rally, or the last leg of the rally, I should say, has clearly been read by banks as well as autos. Do you think the tilt of the market is going to remain with these two sectors, and would they lead us higher to even 9,000 and beyond, perhaps?
No, cyclicals will move higher, Aisha. And again, the whole premise, as I said, is expectations of policy reforms along with credit demand growing at a very decent clip. Add that up with good monsoons, the 7th Pay Commission recommendations coming through will create further demand to come through the system. So I think expectations of decent double-digit credit growth, lowering of credit costs, asset quality pressures easing off, working capital constraints going away. I think this is probably what is abetting the rally in a lot of the financials that you're probably witnessing at this point of time. And as I mentioned, I think the government reform processes, whether that be cement, power, I think that is going to create further fillip for these sectors. So post monsoons, I think as utilization and levels pick up for all these sectors and an activity picks up both on the construction part, which includes infrastructure as well as housing, I think these cyclicals are expected to do well. And this will again lead to a typical cycle where asset quality pressures are expected to go down over the next few quarters, credit growth expected to pick up, which ensures credit costs stay down. So largely I think financials and cyclicals, including auto, and the numbers that you've probably seen at this point of time with dealer push through happening because of the festive season coming around, I think that would sustain as well with good monsoons and the 7th Pay recommendations. So largely I think the stocks might continue the rally in all these sectors that we've mentioned, but again one needs to be really careful because valuations again have become really expensive at this point of time.
I have an order. प्रॉपर्टी को इसके नाम करवा दूं, सारी तीनों बच्चों को ना दूं.
Plant has just been commissioned. We had to go through all the quality tests and get the certification for Indian and as well as European applications. And I'm happy to share with you that all the certification programs have been successfully completed. We are now ready to do the commercial production. We have had several pilot runs where the results have been extremely encouraging.
With regard to your order book as well for this new product, if you just talk about that, as we understand, you also have an export order. Is that a market you're looking at as well?
Well, yes, certainly. Once we produce this product, it will be offered to both domestic as well as export market. And fortunately, we have an order for 30,000 tons of export order for this. So it's a good start. And we will also be pitching in for all the domestic demand for head hardened rails. These rails have so far been sort of imported from abroad. So now, with we coming in, I think India can become completely self-sufficient, and is a big sort of step forward for our Make in India program.
The price differential is obviously going to be crucial. The steel industry has been, of course, suffering from dumping coming in from other countries as well. Is that going to be a problem with this product as well, or will you be able to offset the price differential sufficiently?
The rails have not been covered under the MIP or anti-dumping program. I think there are not very many producers in the world. The head hardened rails, there are only just 7 producers so far in the world, and we are the 8th. And we are ready to take the competition. We are local, and there's no sea transportation involved with us. We can supply orders in small quantities at short notice, and obviously we'll also try to make the product very competitive for our customers. Make sure that the head hardened rails prices are very close to the prices of the normal rails.
So would you of course then go on a limb and perhaps say that your pricing for the head hardened rails product will be more competitive than perhaps your international partners?
Yeah, certainly. That would be our endeavor, to make sure that our rails find more and more application.
Would you put a number to it perhaps?
No, it's difficult to put a number right now, but as I said that we will want the railways as well as the freight corridors and metros, all of them, to switch over to head hardened rails more and more. And
well, that's Ravi Uppal from JSPL talking on the sidelines of a new launch with our colleague Gaurang Sinha. He's talking about their total order book position right now, which stands at 3 lakh tons for traditional rails. He's also said that they're ready to take on competition in head hardened rail segment. This, of course, on the sidelines of the launch of their new plant for traditional rails. That's JSPL in trade for you, currently holding out, as is the markets. We are sticking by around that 8,900 level. But Mayuresh, coming back to you, can't let you go without talking about a few stocks that you think would still be good buys.
So I think the tire stocks have witnessed another better run, and our own take is that they will do well because rubber prices have come down. Now there's a stock called Goodyear India. I think the stock is predominantly into tractor sales, which accounts for 50% of its top line. So largely, I think if you look at the balance sheet position, it has got cash and cash equivalents of close to 334 odd crores, and that is close to 25% of its market cap at the current juncture. Secondly, I think if you look at the ROICs are pretty high, 84%, and expected to remain so because of the growth that is expected to come from tractor sales and volumes increasing ahead, because good monsoons have probably aided and abetted the fact that tractor sales will not happen just for the farm sector but even for the construction sector, considering the different horsepowers that they cater to. Secondly, I think if you look at the EBITDA margins, our own take is that 10.5% should be maintained, the top line growth of 7.5% over the next couple of years to around 1,700 odd crores, profitability to around 120 odd crores, and an EPS of around 53 odd rupees. It trades around 11.2, 11.3 times, and my own expectations is that the stock is poised to do well. The second stock probably from the media space that I'm liking at the current juncture is TV Today. Its Hindi news channel Aaj Tak has predominantly been the number 1 position and the number 1 channel for years to come. The English channel India Today has occupied a number 2 spot. When it comes to the radio business, out of 7 channels, 4 channels have been sold, 3 in the process of getting sold. So that will add to profitability of the company going ahead. And our own sense is that the top line growth and the bottom line growth should be anywhere between 16.5%, close to that 750 odd crores on the top line, 128 crores on the bottom line, with an EPS of around 21.5 rupees expected to get reported for FY18. The stock trades at quite reasonable valuation. So my own sense is the content and programming cost look very optimized for the company, and if the remaining channels do get sold over the next few months, that obviously aids profitability. So again, I think TV Today is something that I'll continue to prefer, and a clear disclaimer, we might be holding these stocks on behalf of our clients.
Okay, so those are the 2 stocks that you're liking. Mayuresh, on a lighter note, Times Network is not listed, so perhaps we could still, and we are the #1 media network here. But thanks always for joining us here on ET Now. Time for a short commercial break. Stay tuned. You're watching Markets Now on ET Now.